Okay, so welcome all. Welcome to Financial Freedom. My name is Samir Bapat, and today we are going to do the second session. So, first session on fundamental analysis we did on Friday. Today we are going to do the session 2, and we will be concluding the fundamental analysis. So, sorry, my throat is not so good today. Thoda cough and all is there, so please tolerate with me. Please tolerate me. Okay. So, how many of you went through the annual report of MTR over the weekend? Can I have yes from all of you who read the annual report of MTAR over the weekend? Some pages, few pages, something. Okay. Okay, so Anirudh says still going on is okay. Some pages, somebody opened it. Okay, let's start. How many of you have opened the annual report? Ki chalo aaj padhte hain. Bhale you have opened and then closed. Can I have yes from all of you if you have at least opened the okay. Some pages. Okay, good. So few people have at least opened, some few people have read some pages. Good, excellent. Don't let it go. Read 2, 3, 4 pages every day. More, increase the speed. 10 pages every day. Finish it. I can. Yeah, fantastic. 30 to 40 pages is fantastic. Once you complete the entire report, it's not about MTAR. It's about reading the report. And once you read the report, you will come to know wonders that are mentioned in any annual report, which is well written. So, sorry. So you have to start reading the annual report, read through it, and I'll take feedback from you how much wonderful it was. So let's move ahead. We in the last week we have completed sales growth, profit growth, net profit growth, then we shareholding pattern, inventory days and all. Today we will discuss about market capitalization, ROCE, ROE, and what is PE compared to peers. Broadly speaking, if you are reading an annual report, if you have gone through the previous webinar, what I did on Friday, and what we are doing today, if you do that much also, then you can be rest assured you are investing for long term. If you are not doing this much basic, then sorry to say that, but whatever share you purchase, don't tell anybody I'm doing it for long term. So I'll rephrase whatever I had taught on Friday, whatever I'm teaching today. Before buying any share, you should do that basic analysis of that share, then buy the share after getting convinced. In case you are not doing those basic checks and buying a share based on some TV recommendation, some WhatsApp forward or something like that, at least don't call it as a long-term investment. Don't tell anybody that I am investing in for a long term. Just keep quiet. Okay, I didn't follow the process. अब भगवान के भरोसे है. If I get return, well and good. If I don't get return, well and good. So that is one thing we have to at least not tell lies to ourselves. Okay, so Sham is saying we get a recording. I have uploaded it on YouTube. If you are part of my financial fitness group, you must have got the link also for the playlist or the recordings. Or you can subscribe to my channel, you will get there in YouTube. So market capitalization. What is market capitalization? That means nothing. What is the size of the company? So how do you determine size of the company? See, it's all relative things. Market small cap, mid cap, large cap is like by the wording of it, you can get it. Small cap is Okay, by wording of it, you can get small cap is a small company, mid cap is a mid-sized company, and large cap is a large cap company. So whatever is the number of shares which is allocated by the company in the market. So whatever is the total number of shares multiplied by the current market price, whatever the outcome comes, that is called market capitalization. That means if all the shares of the company are sold today at current market price, how much it will go for, that you can say market capitalization. So if a company's number of share into current market price becomes 500 crore, up to 500 crore, it is small cap. 500 crore to 7,000 crore, it is mid cap. 7,000 crore to rupees to above is large cap, super large cap, like that. But normally this is there. Why this is important to know? Because we many times we invest into mutual funds like small cap mutual funds, mid cap mutual funds, large cap mutual funds. So when you are saying small cap mutual fund, that means they'll be invest in the company which are having this capitalization 0 to 500 crore. Mid cap will be 500 to 7,000. Large cap will be like that. When you invest in a mutual fund which is mid cap, even if it comes to know a very good company in large cap, it will not invest into that company. It will invest into that segment only. So you have to remember that why this capitalization is important. When you are buying share, I think you should take care that you are buying a company somewhere in the mid cap, starting from 2,000 crore or 1,000 crore, to be on the safer side. Small cap are little riskier, and we don't want to take the risk. Second thing, what is we are going to learn is ROCE, return on capital employed. Why it is important, I'll tell you. Now I will allow you to, I'll share the screen and I'll allow you to unmute. I want few inputs from one of you. Okay. So hold on. Okay. Okay. So here we go. Okay. Now, I need one volunteer. Okay. Who has purchased apartment as an investment. Like I want someone who has little experience or who knows about something, not necessarily that he owns the apartment, but just for the number basis. So what I want, so can I have one volunteer who has, they can unmute and, okay, so Nina has unmuted, great. What I want you to from you is just give me a cost of any apartment might have purchased or you know someone has purchased, what is the cost, what is the rent. So I'll show you some calculations and basis that I'll explain ROCE to, oh, she has, okay. You are there, can I hear some yes from you? Okay, so Nina is not audible. Can someone else volunteer, unmute?
Yeah, I'm Rajesh Dixit here.
Yeah, Rajesh ji. Yeah, please. So other people I'll mute. Other people, please go on mute. So, okay, okay. Okay, Rajesh ji, give me cost of one apartment, something which you know of, something like that.
Okay, so I will take my example only.
Okay.
Almost it is 11 years back. 50 lakhs is the cost, all
50,
put together.
11 years back, 50 lakh was the cost.
Yeah.
Okay, 50, 100, 1, 2, 3. Okay. Loan?
Loan I took 40,000. Sorry, 40 lakh. 40.
100, 1, 2, 3. Okay. And so you paid 10, 100, 1, 2, 3, 10 lakh as a this thing. Okay. So what was the rent you are getting that time? Or for that property, what was the rent going on then? when
For
10 years back?
at that time, the rent was 22,000.
Rent was 22,000, right?
Yeah.
So 1 year rent would be 2,64,000,
Right.
correct? Now, see, so everyone okay? Can everyone type? So far, so good. Everyone is clear what we have done so far till this point, column E. Yes. Okay. Now, what is happening? What we have to understand here is the total cost of the apartment or the house, what Mr. Rajesh had taken was 50 lakh rupees. He took loan of 40 lakh rupees. He invested 10 lakh rupees in the house. Those days, 10 years back, the rent was 22,000. So 1 year rent was 2,64,000. So the total capital employed for buying that apartment was 50 lakh rupees. Correct?
Right.
On that 50 lakh rupees, he used to get 2,64,000 rupees as a return. Return on capital employed. So return on 50 lakh was 2,64,000. So the percentage was 5.28 percentage. Is everyone okay?
Yeah.
Can I have yes from all of you that ROC, return on capital employed, percentage is 5.28? Yes. Okay. Now, roughly, if I take 9% principal interest plus principal, those days he might be paying 3,60,000 as a repayment for the loan. Tax, since he was repaying interest and all, let's assume there was no tax he had to pay. So net profit, why it is coming D2. Okay. Okay, sorry. So it will be D2. Okay, so net, he was like paying more, roughly around 96,000 from his pocket 10 years ago. Correct? Roughly.
Correct.
So now ROE, that is return on equity, he was not getting any return on his equity. What is equity? Equity is whatever he had given from his pocket. He had given 10 lakh rupees from his pocket. If he had given the house on rent, he would have got some rent, but finally he would have to pay from his pocket to repayment of that loan. So a return on equity is in negative. Everyone okay? So far so good? Yes, no? So you
Yes,
have
sir.
to understand the distinction between ROCE and ROE. What is ROCE is return on capital employed. What is capital? Which includes the the amount brought in by the shareholders and loan taken from the bank or debentures or something like that. Total is the capital which is put in the business. Roughly, there are some finer calculations, but don't worry about it. Nutshell mein, if you are understanding this, total capital employed for that company is the money put by the owners, promoters, and shareholders plus the loan. It becomes the total capital. Return on capital is calculated like that. Then we have to calculate how much interest we are paying. Then we have to calculate how much the tax liability is there if we are at all earning out of it. Then we have to calculate the net profit. Net profit divided by the amount brought in by the shareholders will give you the ROE. Okay. Now let's take the same example. Let's say the cost is same because whatever is the market cost doesn't matter. Even if the market cost of that 5 lakh rupees is 2 crore rupees. But right now, whatever is the capital invested in that home is still 50 lakh rupees. So there is no change in the capital of the cost. So total capital employed in that apartment is still 50 lakh rupees. Market value is 2 lakh rupees. Okay. So don't get confused with the market value and the capital in the business. Okay. Rajesh ji, what would be the loan right now approximately?
Approximately now balance loan is 24 lakhs. 24 to 25.
100, 1, 2, 3. Okay. So now the self portion is, so we can say that is debt is served. So your own, whatever is your participation in the total cost is 26 lakh rupees.
26.
And 24 lakh rupees is our debt, whatever loan we have taken. What would be the rent right now for that property?
It is a 35,000.
35,000. So let's take 35, 1, 2, 3. Okay. So 1 year rent, let's say this is the rent. Now ROCE for the capital employed has become 8.4 as of today because of the increase in rent. So the income from that is there. Now interest principal, what we are paying is maybe 2,16,000. Roughly I have calculated it, maybe more or less something like that. So now tax liability is how much? If we say why it is coming zero, rent is 4,20,000 into 20. It's greater than zero. Okay, what I'll do is I'll manually calculate. Is equal to 1 year rent minus interest and principal paid. So you have, let's say 2 lakh now are getting saved. Now out of that 2 lakh, let's say for assumption's sake, Rajesh Ji is in 20% tax bracket. Just for assumption's sake, he can be in 33% tax bracket also. Just for calculation, I'm taking this. So into 20 divided by 100. No, so this is the tax. So 20% of whatever is left, balance is 40,000. So he has to pay tax for assuming 40,000 rupees. Okay.
40,000.
So now net profit from the rent is this minus this plus this. So after net profit after interest and tax is 1,63,000 something. So return on his money, which is this thing, divided by his self contribution is into 100. So let's multiply 100 into this thing. So now his return on equity, right? ROE, return on equity, is 6%. So whatever money he has put in the business, from that money, this year he got 6%.
Yeah, correct.
Correct. So everyone got the concept. ROCE and ROE, return on capital employed, is the entire capital for the business. ROE is the return on money what shareholders have paid. Clear, everyone? I am not an expert. I will not go into finer details, but मोटे-मोटे तौर पे यही है. Fine. Now, when we are analyzing a company, what we want is, first thing is market capitalization. I'll increase this area. So market capitalization should be more than 1,000 crore, or at least take 2,000 crore. Okay. Take 2,000 crore as market capitalization, whichever company you are going to buy share, because we are new in the business. We are learning something, so we should be cautious. Go for a business which is 2,000 crore and plus. So this is 7,000 crore market cap. Fantastic. Do we want a higher ROCE? How many of you think we want a higher ROCE? Return on capital employed, whatever is the money put in by business, shareholders and all this, we want a higher returns? Yes, no? Rajesh ji, what is your opinion?
Yeah, return should be higher.
Return on capital employed should be higher.
Higher.
So that is there. Then finally, when we pay interest, tax, everything, then whatever is left out should also be higher, which is ROE. ROE should be also higher, return on whatever money I have invested in that apartment.
Yeah.
Correct. So that
Correct.
way, when we are analyzing a company, so what we are doing is twofold checks. What is the return on capital employed? That is the entire capital. What is the return on the money shareholders have put? If we are having checks at 2 points and both points are giving positive returns, company ठीक है. Fundamentally, the company has been doing good. Okay. So typically, if I want returns greater than 15% in my market, my basic requirement is that at least ROE should be 15%. ROC should be decent, 10 and more. 15 ho to bahut badhiya hai. So this is my criteria, filtration criteria for any good company. So whenever someone says, okay, go and buy the share of this company, I'll go through the all this profit loss. It doesn't take more than a fraction of second to just skim through. Okay, are they doing good? Are they doing good? Are they doing good? Yes, yes, yes. Go down. Okay, then here this is your debtor days. Okay, that should decrease. Inventory days should decrease. Then you go shareholding pattern. Public के पास ज्यादा share नहीं होने चाहिए. The public should have less shares. More shares should be with promoters and DI and FI. If that much is okay, ROC, ROE is okay, I would say the company is fundamentally okay. So far it is okay. Then we should be going in for some more analysis and we should be seeing. Okay, I missed some question here. Yeah, so Sudhir Mahajan is saying that fundamental analysis is available. Yeah, it is right. It is his question, but it is his right. What you are saying is right. So thank you, Rajesh ji. Thanks a lot for being a sport, volunteering for giving us some inputs to make everyone clear. Thanks a lot.
Thank you, sir. One small question. Because here in annual report, people always sees the assets company, whatever the assets company is having. Right. So
Correct.
like that in my case also, now my asset value is 1.5 crore.
Correct.
So now I am in profit or in loss. So same is applicable to company.
See, okay. Let's not call it Rajesh property. Let's call it Samir Bapat's property, for example, sake with this question. Okay. So now when we see, let's say, if asset is good, like let's say Samir is having that asset of 1.5 crores. Okay. Tomorrow, Samir's company goes flop. Okay. Now we will have to go and liquidate that asset ki bhaiya abhi recover karna, I have to repay the loan and everything. Correct?
Yeah, correct.
That point of time, my asset valuation will be useful. Only when we are going for liquidation or we are going to sell it, some portion of it. So lands and all typically will be a good asset. So if you find a company whose asset cost is written X, valuation will be higher, that is a good thing to find out. And that can be materialized any time, point of the time. Let's say if we had 4 apartment with 4 different rooms, I can sell off one room. Then again, I can monetize that one room for the business. So if it is valued at higher price, it is good. But till the time I don't sell it, then it is only a notional value.
Right.
So when we are finding a good company, we can as well go and see their asset that, okay, the assets are there. They should have land. Land is the bigger asset. So land appreciation will happen, whatever is the offices they might be having, building they might be having. That is of good value, but only when they get monetized. So you can be rest assured, theek hai, company acha hai, they have so much assets which can be liquidated and sold off, and tomorrow we'll get the cash. If that is good, then again, it's a plus point for that. Okay, so once you go through that everything, then final thing, annual report, see the annual report, make short notes on the following topic: what is the core business, what they do, what is the core, like we discussed about Hindustan Unilever, Asian Paints. So what is the core business, what is the business they do, what is the available capacity, are they expanding and all. Even if you don't understand, at least go through it, that are they expanding, the market, because only person who expands himself will grow the business. If he's happy with whatever he's having, then neither sales will increase, neither the profit will increase, neither my share value will increase. So at least see, do they have any expansion plans in pipeline, maybe this year, next year, something like that. It should be there. If they are expanding, my share value will grow. Expected growth rate of sector roughly pata hona chahiye. Value addition to customers, like what is the value addition, why customers are looking forward to take product for him, why. I'll give one simple example. I purchased one share some a few years ago. It was Control Print. Now Control Print, now I have sold it off, so I'm not having that. I should have kept it, but I'll tell the philosophy behind it. It's a very simple philosophy, that Control Print used to make that barcode. Whatever we get a product, they'll make the ink for the barcode, and I think they were doing some barcode also. Now imagine with Amazon, Flipkart, Zomato, Tomato, everyone coming in, everyone needed to print that barcodes on the delivery products. So that company had a growing business. As more and more we have e-commerce and everything, and we have products and more consumerism, someone needs to give that print to print that barcode, right? So Control Print used to give that. So based on that projection, I had purchased that. So simply, if you know that, okay, what is the value addition core business, why that core business will grow, you can buy simply, you can analyze and see, but other parameters also. So why do you think the company will grow? I thought, okay, because everyone is going for delivery, Flipkart is coming, Amazon is coming, everyone is coming, they will need to print the barcodes. Someone needs to give them the barcodes. So Control Print was giving, company was good, share buy kiya, bada, बेच दिया. What is the strength of the business, why others cannot penetrate that, and litigations, if they are having any litigation like NCLT and or, then you should have at least some litigation which should not be threatening, and any situation which may impact the company. So if you do this basic analysis, I can guarantee you that whenever you are buying a share for long term, it will be very, very difficult for you to lose money in stock market. But this is basics. Before buying, if you are classifying, you are buying as a long term share, Friday's session, today's session, basic sanity check, read through, skim through the annual report, see what you can write in your notes, make a diary, write down on these points. Then if you buy the share of the company, and then you can claim you are the buying it for long term, I can assure you, over the period, it will be very difficult for you to lose money. It will be very easy for you to beat the market. And even if you have this habit, you'll be able to invest in mutual funds also, because wherever mutual fund is investing, you can just go and analyze wo company hai kya kar rahi hai, are the companies are good, then you will invest in that mutual fund. Okay, so this is the fundamental analysis. Mala, this is fundamental analysis. This is for long term. This is not for intraday. Intraday, you don't need to do any fundamental analysis. Simply, you should know the technical analysis. Okay, and this is exactly as I said in the first day. As soon as and you are a beginner, right? Okay, so don't. So that is also one. One trait of beginners, they want to कि बस आज मैं मार्केट में पढ़ना चालू किया, कल मुझे नोट छापना चालू होना चाहिए. Have patience, learn things, don't go for intraday or anything. Understand the market. There is some journey to go, and which I explained on the day 1 or day 2, I think, that as a beginner, keep patience, learn things, go slow, understand the investments, because we are here for wealth creation. Don't get lured away with the monthly income, yearly income, money getting doubled in 6 months. I have very rarely seen it. Very difficult to achieve, possible to achieve, difficult to achieve. Don't fall for it. Fine? Okay. Okay, so this is all what I wanted to cover in fundamental analysis. I am expecting next Monday. So you have one more weekend, those who have started, those who are very serious about learning how to create wealth. We have started doing MTAR. I want everyone to finish reading MTAR by next weekend. Next Saturday, Sunday also you are free. So read through it, make five bullet points. So next Monday on fundamental, extremely sorry. On fundamental analysis, I want 5 to 7 bullet points from you based on this. Very crisp bullet points regarding MTR. So that will make me give assurance to me that whatever I have taught, you have absorbed, you have learned what to do, and you are ready to do fundamental analysis and earn a lot of money. Can I have some promise from people who have started reading that they have 7 days time, they'll make effort to prepare some notes on MTR? Yeah, I want at least same MTR. We will see from 3 to 4 perspective, right? So participants, 3 to 4 participants, just putting their viewpoints. And we want negative viewpoint also. So 8 points, someone should say, no, we should not buy this company because of this, right? So let's be ready with the notes. Next week, everyone will get 5 to 7 minutes and let's hear it out. So 7 bullet points, 5 minutes, and we'll go through. PE ratio is the price to earning per share. PE is a biggest hoax of the century. They say low PE is very good. It's a big hoax. Don't fall for PE, low PE only. I would suggest if someone is trying to sell you a low PE, go and do all the analysis. Then only see if it is really low PE, then go for it. Okay. Okay, great. So that brings to the end of the session today. I hope everyone learned a lot of things today. Can I have yes if you have learned good things? If you want to take snapshot of these points, you can take the snapshots. So what to write in like finally after comparing all the gains, you can take a screenshot and maybe write it down and prepare something. Don't write exactly on this point, but roughly on this point. Okay, so thank you so much for joining today. Sorry for my sore throat. By tomorrow, I hope it will be okay. Even if it is not okay, we'll go ahead with the session tomorrow. So see you all tomorrow at 9 p.m. same time. Thanks a lot. And I'll upload the video on YouTube. Thank you. Thank you so much.